Welcome to another weekly Forex forecast on ChartsEmpire Trading Institute for May 6 to 10, 2024. This week, I have the British Pound Sterling USD, Euro USD, USD Canada, Canada Switch, and Dollar Index on my watch list next week. Before we start this weekly Forex forecast, make sure you are trading on a reliable, transparent, trustworthy broker that provides accessibility to a wide range of assets, offer a low spread, and an easy trading platform. Are you interested in seeing my broker recommendation? Check the link down below. GBPUSD. It is obvious price carved a strong upper shadow bearish pin bar last week Friday. This bearish pin bar has higher tendency to interest sellers to short this asset this week. The risk on this pin bar is kind of too wide. Therefore, it is better to wait for a bull retracement to test the descending trend line. Navigate to the lower time frame for early short entry setup at the test of the trend line next week. Take note, one of the next major key level support acts at the price of the 1.25184. Likewise, the demand zone at 1.24700. This level could hold as support against the bears. A successful bearish day close below these two levels could expose the next major support at 1.23004. Alternatively, the bulls could switch the market from the 1.24700 as a higher low swing for reinforcement to break above the descending trend line to expose the next key level at 1.27119. I will announce my decision in the trading community. Are you interested in seeing my fundamental and technical approach to the British Pound Sterling USD weekly Forex forecast next week? Join our Telegram group. Link down below. Euro USD. There are 5 strong confluence factors supporting higher possibility of bearish swing next week on Euro USD. Here are the factors. Number 1, the trend swing is bearish. 2, the rejection from the descending trend line. 3, 78% Fibonacci retracement premium level bearish rejection. 4, intersection of minus supply level of a previously broken neckline double tops on the 4-hour chart. 5, an obvious sell-off constituting the Friday bar to lose more than half of its bull volume. Based on these 5 confluence factors, the bears have higher tendency to test the next major support level at 1.07240. Failure for the bull to defend this key level could expose the next support key level at 1.06022. Alternatively, a strong bull day candlestick close above the 5 confluence points of intersection would suggest higher exposure of the next key level resistance at 1.08771. I will disclose my decision in the trading community. Are you interested in seeing my fundamental and technical approach to the Euro USD weekly Forex forecast next week? Join our Telegram group. Link down below. USD Canada. It is obvious price formulated a double tops to a previously broken supply level at 1.36140. It is obvious how the level proved as demand on Friday. Not until the new demand structure at 1.36140 is completely broken, engaging in a short setup seems like a suicide mission. 4-hour chart bullish pattern with strong volume and momentum could interest buyers to long to the next key level at 1.38475 next week. Alternatively, a successful strong bearish day close candlestick below the newly formed demand level at 1.36140 could expose the rising trend line underneath the price. This rising trend line could lead to the continuation of the existing bull rally on the USD Canada. In times of risk analysis, it is better to watch out for possible long setup at the key level of 1.36140 or from the rising trend line test zone. However, a switch of trend to the downside is needed to be proved through a strong sell-off all the way down through 1.36140 and the rising trend line. Finally, a bull retest and a sharp bearish rejection from the neckline would confirm the early indication of a downtrend formation. I will disclose my decision in the trading community. Are you interested in seeing my fundamental and technical approach to the USD Canada weekly forex forecast next week? Join our Telegram group. Link down below. Canada switch. There was an obvious strong sell-off on Canada switch last week to the key level support at 0.66039. Take note that the key level is yet to be broken. In times of risk to reward ratio, it is better to wait for a bull retracement to 0.66458, which is an obvious broken demand structure on the 4-hour chart for a possible short entry. Also, this bull retest would intersect the broken rising trend line of last week Friday. Take note of the next potential demand at 0.65596, which could give an opportunity of a retest entry at the 0.66039 if the price should fail to give a bullish retest of the broken rising trend line. Alternatively, a strong bullish high momentum close above the broken rising and the minor level at 0.66458 could suggest possible liquidity sweep by the major market players next week. A confirmed liquidity sweep to the upside has a higher possibility to resume the bullish trend to break the key level resistance above at 0.67219. I was able to secure some profit through trailing stop from my long trade carryover from the previous week through the massive bullish pin bar here, which I shared the trade in our trading community. Are you interested in seeing my fundamental and technical approach to the Canada switch weekly forex forecast next week? Join our Telegram group. Link down below. Last on the list, dollar index. The dollar index can serve as an indicator to help monitor the strength of USD next week. Here on the daily chart of DXY, we can build confluence factors supporting USD is bullish. Factor 1. The key level of the 104.620 strongly held price last week Friday as a proof of bullish strength. Factor 2. The rising bull trend of the DXY from the low of December 28 last year 2023 is yet to be voided. Factor 3. The application of Fibonacci retracement tool proved the golden number or discount and premium level acting as strong support. Factor 4. The signal bar formed can be tagged as a pin bar by some traders, while some could argue it is a bullish reversal bar. Well, the major concern is this bar proved a strong bullish strength to hold firmly this key level as support. Therefore, a strong bullish close above the minor broken demand structure at 38.20 Fibonacci retracement level would suggest the continuation of the existing bull trend. Alternatively, a strong bearish close invalidating the Friday bar could lead to the exposure of the next higher low swing at the 100% Fibonacci retracement level. A bearish move on DXY would activate bullish swing on base cross currency against USD, while bullish move on DXY would activate bearish swing on base cross currency against USD next week. Are you interested in seeing my fundamental and technical approach to the DXY weekly forex forecast next week? Join our Telegram group. Link down below. Last week, we had losing trades on AUD/USD and GBP Canada. The same week, we got new short entries and we initiated short entries on GBPUSD, EURUSD, AUD/USD, New Zealand USD, GBP Switch, and GBP Canada. All were closed in profit by members of the community, but I focus on shorting the GBP Switch and GBP Canada. I'm still trading the short setup on GBP Switch in profit as a swing trader. Position disclosure: short on GBP Switch, long on Ethereum and Solana, holding DJT stocks. Are you interested in seeing my broker recommendation for holding or speculating cryptos and stocks? Or you might be interested in more market analysis in the forex, cryptos, commodity stocks, and index market? Check the links down below. That is all in this weekly forex forecast. Looking forward to seeing you in the next weekly forex forecast. Ensure proper risk management in your trading decisions. Peace.